What's up, everyone? Welcome back to Earn It, Save It, Invest It. I'm going to spend the next 10 to 15 minutes showing you the easiest way that you can make $1 million. So I'm going to break it down really easy. If you can, give me a like and subscribe. And like I said, 10 to 15 minutes top. Let's get to it. So this is about stocks. This is a stock market channel, obviously. So this is a millionaire making stock. Now, what stock is this? If you can see read the text down there, it is TQQQ. TQQQ, right? Disclaimer, really quickly, it is highly risky, right? It is risky. Now, it is triple leverage. I always want to do this disclaimer first because, with high risk comes high rewards, right? The TQQQ aims for 3x the daily return. If the NASDAQ 100 drops 10% in a day, TQQQ drops 30% before fees and expenses. This creates extreme volatility, massive drawdown such as 70% loss seen during the March 2020 crash. And then you also have volatility, decay, and beta slippage, and volatile or sideways markets like it has been for a little while before this kind of crash. The daily reset means TQQQ loses value even if the underlying indexes end where it started. So it constantly loses value in turbulent markets, a phenomenon known as beta slippage or volatility decay. So that's just a quick disclaimer, high risk. Now, in a time like this though, this is the month of March so far, and it is not going well for the stock market. So, and as you can see right here, right, the top 10 stocks to watch, this is all for, was it March 27th, a Friday, and some of these stocks got hit hard. Now this is TQQQ, their seasonality, how much they go up and down every month for the year, right, over the last 10 years. And so as you can see, there's this, but then we also have this. Now, I circled all 15 plus moves in 1 month, and then I also, whether it was up or down, right? So green, we have 32, there was 32 times where it went up 15% more or more, and then it went down 17 times. As you can see, this stock is very volatile. I mean, you can see it is like, it's Christmas, it's lit up like a Christmas tree, right? A lot of red and green. The highest upward move in a month was 46%. The biggest downward move was negative 38%. Let's see if I can find that one really quick. Negative 38% in 2020 in March, right? And then we have the 46%, which was right after. So that's kind of funny, right? We also have a 33% up, 37% down, which was in 2022. Not too surprising. Then we also have a 39% up. And then when you look at 2023, we have a 32 up, 27, 23, 18, 33, 15, right? It goes everywhere. I have right here 18 because this is kind of where we currently are, minus 18. And as you can see, we've had big months of where it goes negative 16 and then negative 30. This was in 2022. So, over here in 2020, you have negative 18, negative 10, which again was in 2020 after the big rush, after, the huge crash. Then we had this huge rush. And so what are we going to have? We're going to have kind of, maybe negative 18, negative 20% by the end of March. That'd be about negative 28%, for the 2 months. And so that could move lower, right? Technically, it could move lower in April. So I'm going to go over how much this thing makes every year, right? And it started in 2010, this fund, and it went up 76%. Then it went down about 10%. Then look at all this: up 49, up 136, up 55, up 16, up 9, up 113, down 21, up 128, up 107, up 70, minus 80. Then up 188, up 53, up to... If you saw this on any stock, you'd be like, that's an amazing stock to be in. Now, granted, there was times in here where it dropped very significantly. And we're going to go over some of those, but, it's volatile, right? So the thing is, though, I'm going to explain exactly when you want to buy it, because I buy it, I own it, but I am not going to buy it all the time like I will buy other stocks. So you can see the overall return is 12,300%. The average is about 35% a year. The exponential trend line, which I'm going to show you, it's called what is it? True. I'll show you. It shows the actual, like, how much you got for each stock from IPO, total return, and what the trend line is going. It says it's going about 37% right now. If you started at $10,000, you'd have 1.2 million, and that is in 16 years. Exactly 16 years, you would have 1.2 million. That is pretty crazy. Now, what's also crazy is that, oh, I messed up. I took a screenshot of yesterday, and it was 80K more. And so when you see this and it was down about 6%, this 6% meant $80,000 for people who put in, $10,000 at the IPO. So obviously, it gets, the losses become bigger as you as you buy earlier. But TQQQ, let's look at, this is the chart from IPO. Now it says 1, that means the amount of stock you have in TQQQ, right? So you'd have one stock here, but now you'd have about 120 something, right? 124. So as you can see, here's the results, right? Now, what is this called? This is called totalreturns.com. I highly recommend you using it, because you can also use, adjusted, inflated, adjusted, or not. Oh my God, I got something in my eye right now. But here, I wanted to show you something. Let's say we start out with $1,000, so we can't really, you know what, maybe do this. There we go. Start off with $1,000, save for 15 years. Let's say your total rate of return is just 25%, just 25%. And you put in $100 a month, you would have $160,000. You would put in $19,000, and you would have had $141,000 in interest. Now, remember, over the last 16 years, this thing has had 37%, right? Or it was 35%. The trend line was 37. So let's say 35% over the next 15 years, you have $395, almost $400,000. Now let's just say, let's go back to 25%. I'm 37. I'm going to be in my 60s, hopefully in my 50s, maybe my 40s when I retire, but let's just say I'm in my 60s, as a lot of us, I guess, are planning to, right? 60s, you have a retirement account. Let's put this to 30. You see that number? 4.6, almost $4.7 million in 30 years at 25%. You invested $37,000 and you're going to get Now, here's the thing, right? We got to look at the stock. Here's the stock. It goes crazy. This thing goes up and down, up and down. You see in 2022, this thing went all the way down. It dropped 81%. This was an 81% total drop. I don't like to buy when things are really extended. I like to buy when it's at a 30%. Now, you have to understand, this might happen again. This might happen again. This eventually might come crashing down all the way to the 20s. That's okay. Buy it when it does that. Because remember, we're thinking long term. Now, if you're a senior, you might be thinking different. Most people, if not everyone who is watching this, is in their 20s to 30s probably. Maybe in your 40s. Even at that, 40s, you're looking at 20, 25 years, right? So this is just, you look at this, but this was 1 year. Then this was another 2 years. So you're saying over a 3-year span, you had nothing but just buying opportunities? Because eventually this thing's going to keep going up when you see how much, you see the trend line of where it's going. Now, you have a lot of drops. This one was about 70%. This one was 29%. I need to go up full cam on this, full screen on this. Then I have a 24% on this, 21%, and then we have a 80%. So, and what's crazy is if you bought, let's say you bought here, right in the middle of all of this, if you bought in the middle of all of that drop, you'd still be up almost 100%. This is the 20s, between 20 and 24. It's at 38 right now. You're up like 80% in just 2-3 years. After it's gone down 31%. So what I like to do is I like to buy this stock. I buy this stock. Go ahead, like and subscribe if you can. I like to buy the stock when it goes down 30% or so, 40%. That's when it's really starting to show some value. Because to me, I don't need to try to time out the bottom. If I start buying at 31% and then buy it at 35% and then buy it at, these are all negatives, right? Negative 40%. It goes to negative 50. If I continue just to buy a little bit, buy, and, maybe, just portion it out, right? I'm not going to go 100% in the beginning, just kind of like portion it out and buy throughout the fall. And then as it starts to rise, continue to buy a little bit more and then back up and then wait for the next crash. It will crash again. Anytime the market crashes, this thing crashes way heavier. So it's going to crash again. So just pick up when it gets cheap. Just pick up when it goes down 30%. Right? And if you think about it, if you are picking up every single time it goes down 30%, 40%, your rate of return is going to be better, right? So again, look at just look at this. This is 20. Let's say you put it up to 30%. Oh my God, it's going to be a big difference. That 5%, watch. Oh. Oh. Yeah, this is how the rich get richer. That's all I gotta say. I said I was gonna do this in between 10 and 15 minutes. It's at 12 minutes. That's my $1 million stock. Yeah, I spelled it correctly. Ooh, I thought I had the text wrong. Anyway, give me a like and subscribe. I appreciate everyone who's watching. If you want to be a millionaire, you can start investing into this stock as it starts dropping, but it's a very high risk stock. Just please know that it is high risk. You do not just want to keep buying it. The expenses on it, right, has some high fees and stuff like that. But in the end of it, if you have 15, 20 to 30 years that you think in your life, you got kids, start buying on those big dips. It's gonna happen, right? A 10% dip in the market means 30% in this thing. The markets have gone down 25 to 30%, which means this thing it's gonna go down. It's gonna go down almost 80% sometimes. 90. It's gonna happen again. It will, but over the long term, over the long run. If you buy when it drops very low like that, when it is going down negative 30, negative 40, negative 50, your rate of return is going to be even better. So yeah, that is just my whole spiel. Thank you for watching again. And, we're in this crazy market crash. And if you're aware and you're prepared, you are not scared. Right now, I'm not scared at all. I am ready. I'm aware. I'm prepared, and I'm ready to buy. And it's weird to feel good about a stock market crash. I don't feel good about a stock market crash. I just feel like I'm rolling through. I should have put that up. I'm rolling through the grocery store, right, with all my stocks on sale. And that's what it is. And so I'm kind of glowing a little bit in that, where I'm like, I can get some stuff on sale, but it kind of sucks for older people, right? Like I got my grandma and stuff. She's like, she depends on it, but she also doesn't spend a whole lot of money. So it's like, she's going to be a little bit of this and Social Security. It's fine. It's the people who, I guess, really are depending on it, but this is not even a big crash. We're not even a big crash yet. We just hit 10%. I think it was 12% in the NASDAQ. I think we just hit like 9 to 10% in the S&P 500, so we still have a little ways to go too. I do think TQQ, let me just show you. Oh, I'm at 15 minutes. Never mind. I said a 10 to 15 minutes. But anyway, the TQQQ, look at it only if you're up for high risk and you have a good heart condition. Yeah. So thanks for watching, and never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.